We're going to dive right into the discussion. We have a great panel today. I'll quickly introduce them and then we'll jump right in. I'm going to start at the far end there with Sally Blount. She's the Dean of the Kellogg School of Management at Northwestern University. She was previously the Dean of New York University Stern School of Business. She's a director of Abbott Laboratories and serves on some other boards as well. Next to her is Roger Martin. He's the Premier's Research Chair in Productivity and Competitiveness and the Academic Director and the former Dean of the Rotman School of Management at the University of Toronto. He's a strategic advisor to the CEOs of Procter & Gamble, Steelcase, among others. He's a prolific writer. You probably read some of his things. Next to him, in the middle here, is Horacio Rozanski. He's COO and president of Booz Allen Hamilton. He's a roughly 20-year veteran of the strategic consulting firm. He's involved in the firm's 2010 initial public offering and their current Vision 2020 initiative, which charts the firm's future strategy. And right next to me is Dave Dillon. He is the chairman, the current chairman, and the former CEO of Kroger. And he's been at Kroger since 1990, and you're a CEO from 2003 to 2013. He serves on a number of boards as well, including DirecTV and Catalyst. So there's three central questions that we're going to talk about today that are going to underpin the discussion that we're going to go through. We have about an hour for this session, and we're going to leave time for questions. So if there's anything you want to react to or ask about, please note it down. And over the last period of this session, we'll have people come around with microphones. So we'll be sure to get to that. So the three questions underpinning the discussion today. The first one is, what is the purpose of a company? It sounds like a pretty basic question, but it deserves some discussion in this context, as you'll see. The second one is, what is the relationship between business performance and its purpose? And then the third thing is, what do leaders need to do about all of this? So we'll talk about some pretty practical ways in which this plays out in the field. So we're going to start at a very high level with the question, what are we talking about when we talk about the purpose of a business? Roger, I'm going to ask each of you, and I'm going to ask Roger you to kick it off.
Sure. Well, I think of purpose a little bit the way I think of strategy, which is every company has a strategy. It's often not what they say it is. Your strategy is what you do. And I think every company has got a purpose as well. So I don't believe in the notion of purpose-driven companies. Every company has a purpose. Some of them are just not very sustainable purposes, crummy purposes that don't help them out. And others, I think, are a purpose that's explicit, that helps motivate employees, helps motivate customers, and helps them be around for a long time. So it's your overarching intent of how you want to interact with your consumers, your community, and your employees.
And you don't believe in purpose-driven companies because every company has a purpose. Just some purposes may have more moral or social components than others, and some may be shorter and long-term.
Yeah, that's right. I mean, I don't, yeah.
You're taking the technical definition of purpose here.
Yes.
Sally, do you want to, how do you see the purpose of a company?
Well, coming out of the Kellogg School, I have to believe in marketers and customers, right? Yeah. There's a reason why an organization has to exist. And I think whether you're for-profit or not for-profit, there's some people's set of needs that you've come together to say, we can meet better than they can meet on their own. And so for me, the purpose of a corporation has to start with whose needs are you trying to meet. And the first persons that you have to think about is who's paying you money, because that's why you exist, because you don't have profits without revenues. And I often joke with our students, you don't have a market without a demand curve. We have to start with the set of human needs that we're seeking to address. And in a for-profit company, we believe we can make some money along the way as we address those needs.
So the structural of a corporate purpose is, how do you serve your customers?
The first level has to start with, who are our customers' needs that we're here to serve? Okay. And then you think about some other key stakeholders like investors who are going to help fund you.
And we'll come to them in a minute. Horacio, do you want to?
I'll just add, I think a company has many purposes, not one purpose. Yeah. And those need to be interwoven. And at the end of the day, you have to be able to balance your requirements to meet all of those needs, to accomplish all those purposes. You know, it's interesting, we just turned 100 years old and at Booz Allen, and for the first time, for example, we have 4 generations in the workplace. And if you think about that, they don't come to work, and I don't go to work every day just to get paid. If I didn't get paid, I probably wouldn't show up. but not for very long.
Thank you for your honesty.
Not for very long, but just, you know, much like societies don't just exist to exist. Companies don't just make money to make money. And so you have to have that multitude of purposes that allows, for example, in our case, for generations to want to come to the workplace. We have, at one end of the spectrum, people that come into Booz Allen after as a second career, after being successful in the military, for example, and they want to continue to serve the country and keep us safe. We have millennials coming into the workforce with a much broader view on what their purpose is going to be that my generation, the Generation X, had. And you have to have the ability to make all of that compatible and create a workplace that excites all of them, not just one group.
So we'll talk about the challenges of doing that specifically. Dave, purpose, what is the meaning of a business purpose? How do you think about that?
Well, the way I think about that is at Kroger, we're 131 years old, and in the life of Kroger, they've had to change many times. When I became CEO about 11 or 12 years ago, at that time, I brought the management team together, and I'd worked my entire career at Kroger, as had most of the leaders in our organization. And yet we came together and asked ourselves, what's our purpose? What's our objective? What are we trying to do as a business, and how have we been doing in the past? And many of us were the past leadership. I was the president, and so I can indict the past pretty easily because I was part of it. And I take responsibility for that, and actually it was what we needed to do then.
It's even easier when you're not part of it to indict the past.
Well, yes, it is. But at this point, I look at what Kroger needed to do, and we all looked at what Kroger needed to do, and it was all about what do we want our values to be as a leadership team? Mm-hmm. How do we want to represent those to our associates? We have 375,000 associates. How do we want that to work? How do we want to represent it to the world? And then what do we want our objectives as a business to be? And then how do we go about accomplishing those purposes?
So one thing that's interesting in listening to all of you, and Sally, actually a side note, it's interesting that the two of the companies here represented are 100 or over 100 years old, which is actually a long time in the, and you've made this point, Sally, that one of the interesting things about talking about the purpose of the company is that companies are actually generally not that old.
Well, the Industrial Revolution only occurred in the late 1800s, and a lot of what the 20th century, and certainly in the 21st, is about is we're still discovering what the human corporation is, what it's capable of, how do we make it be its best self. Yeah. It's relatively young in terms of evolution, and so we're debating purpose actively now out in the marketplace.
And it's the time is sort of ripe to do it, and in fact, it's not a discussion. It's not a discussion that, in the course of history, has been going on for that long. But Sally, you touched on this briefly, but it was interesting to listen to you talk about the purpose of a company, because I don't think any of you defined it in terms of the return to shareholders. So the sort of conventional view of what the purpose of the company is, or the corporation is, the publicly held corporation, at least, is to maximize shareholder value. And it's interesting that none of you cited that as the purpose of the company. Do you want to, Roger, there's a bit of a history to the thinking about this. Do you want to walk us through it for a sec?
Well, sure. I mean, I guess I just think of maximizing shareholder value as something that you cannot directly do. So I'm sort of against having it be a goal. I'm for having goals that you can actually accomplish directly. And in the previous session, Aristotle was referenced, and I sort of like what he says. You know, it's like happiness. You can't if a man attempts to become happy. Chances are they won't be. If instead they live a virtuous life, they have a chance to be. I think the same holds for corporations. Ever since corporations have made it more explicit that their central goal is to maximize shareholder value, shareholders have done worse, right? So it appears to me to not be something that actually helps the people you're trying to help.
But you're not saying that you can't achieve that indirectly, that you can't serve your shareholders. It's just by not pursuing it in the short term that you do.
Well, I'd say it's by not pursuing it at all. That's the best way to serve them. The best way to serve them is to have a great company, yeah. And the result, because who determines shareholder value, right? You don't determine shareholder value. Shareholder value is a completely ethereal thing, right? I mean, it is.
Yeah.
The market cap of a company at any given point in time is the collective belief of market participants in the likely future events concerning that company. It is no more concrete than that. And that's why it can change incredibly rapidly. It's not like your return on equity, which kind of you have control over, your return on assets. It's an ethereal thing that changes quickly. So the notion that saying my job is to always make sure that the collective view of the market as to the future prospects of this company go up. Good luck.
I mean, that's fairly existential. What you're saying is that the best way to run
I
a
get that
company-
way sometimes, Kevin.
It is just a little.
We're at altitude here, I guess. So
But Roger, you've talked about the history, that the whole idea that the Jensen paper is what got this narrative of the purpose of the corporation out in the late 70s, right? So it's actually a relatively, in the life of the corporation, still a relatively young narrative
That's right.
that we're debating right now.
Yeah, and it would be nice, right, if after the world shifted and said, shareholder value maximization is absolutely central and important, and then companies focused on that, you'd see more shareholder value being created. That would be, then you'd say, okay, that all worked, but the opposite
what's the data on that?
Well, if you look at many measures, if you want to measure return on invested capital, if you want to measure returns on the major stock markets, they have not gone up. By most measures, they've gone down in real terms if you adjust for inflation. And the thing that is absolutely true is while that all happened, volatility increased.
And this is since the late 70s when maximizing shareholder value became a kind of reigning business philosophy.
Yeah. So even if it went up a little bit, or it went up a little bit unadjusted for volatility, you could kind of say this pursuit kind of worked out well. But it's just hard to find any evidence of the pursuit of shareholder value maximization actually resulting in shareholder value maximization. That's why I don't think it's a big trade-off between, should our goal be this or something better for society? It's not a trade-off. This has not proven to work out at all well.
And there are a lot of other factors that went into corporate performance, shareholder performance volatility since the 1970s to today, but you're just saying is that there's no evidence to support the other side of it.
Yeah.
I want to pull in Dave because this probably makes a lot of sense until you're in the CEO seat or you're sitting on a board, and the reality is you have the reigning dogma of maximizing shareholder value, and concretely you have shareholders who are presumably breathing down your neck from time to time about what you've done for them lately. So this is a great idea, but how does it play out when you're at a public company that's reporting?
Well, our management team concluded that if we want to have any value from a shareholder point of view at all, you have to be a well-run company.
Yeah.
And that meant we had to serve our customers better than we had been serving them. And I don't know where everybody in the audience lives, but Kroger has stores lots of places, including city markets here in town. King Soopers up on the eastern part of Colorado. And those stores are terrific stores today. They were not as terrific back in the 90s. They were still good, but they weren't as good as they had previously been. And we began to realize that, and we said if we want to have any value at all as an organization, we need to improve what we do for our customers. Yeah. And so we've changed and turned on its head where we were headed before. We previously were headed towards what does Wall Street want from us, and trying to achieve that every quarter, and we rarely missed. Our stock price did fine, and our shareholders were happy, and that seems like the most unlikely time for a company and the leadership team to say we're going to have to change. But our conclusion was that the long-term trajectory of that was not good, and we didn't think it was good for employment with the associates in the organization, didn't think it was good for the customers, the communities we serve. And I think most of us in our leadership team at Kroger focus more on those three things and believe the shareholder is the outcome, not the objective.
So what are some, you made this shift in terms of your frame of thinking about the purpose of Kroger away from a short-term shareholder maximization to something that probably is a little bit longer term. What are the specific elements of running a business almost on an operational level? How do you implement that shift? What does that mean for?
Well, I told you you're trying to change a tire in a moving car.
Yeah.
Okay, so that's a hard thing to do. But we did stand back as a management team and said, what are we going to believe in? What are we going to try to achieve? Now, this was a team that had been there for a long time. And it wasn't like we were all new to each other. We were not new at all to each other, career grocers. And yet our conclusion was that while we're trying to run the business today, we still need to stand back and say, what do we want to become? And we want to become more customer-centric. We call it, if anybody follows us, we call it customer first. But that sounds like, marketing mumbo-jumbo to most people. Inside Kroger, though, if you ask our associates, I think you'd see that it actually means something more than mumbo-jumbo. It means very specific things. So we got very targeted on what are we not doing today that our customers want from us? What are we not doing today that our associates want from us? We stood back and identified our values. One of our values, by the way, and it relates directly to this, is honesty. And most people think of honesty in its simplest form of telling the truth. Well, of course it's that. But it's also being truthful with yourself, not only as individuals, but as an organization. And we had research in the 90s that told us we were not as good a retailer as you would have heard me say we were when I was talking to our teams. I was believing my own press clippings. I was guilty of that, or listening to my own Greek chorus, however you want to think about it. But we were wrong, and until we got honest with ourselves, we couldn't get serious about the purpose of what it was we were trying to achieve.
Are there any specific examples of, sorry to press in further, but just your customer focus on a kind of day-to-day basis? Were there any specific things that you implemented that reflected that? Well,
there are three big meaningful things. First is we started dropping prices.
Yeah.
Because in the 1990s, the way we made our numbers was raising prices. Now, that was true at Kroger. It was true of every grocery supermarket operation. And at the very time, Walmart, who was bringing prices down, was getting a price advantage. But we let that happen to us. So we lowered prices, and we've lowered prices at Kroger every year now for 10 years in a row, every single year. Second is we went back to try to see how we can personalize this experience. We use data, the shopping data that you scan with your card when you check out. We use that to target coupons to you specifically, to design an ad that you will be interested in responding to, and we use it in lots of meaningful ways. And then third is we identified some shopping experience elements that were real important. So an example would be waiting in the front end of a store. Up until about 3 or 4 years ago, you would have a wait of several minutes to check out. Imagine that, a retailer making you wait for you to give them your money. Yeah. That makes no sense. So we finally said to ourselves, we'd had enough of that, and we were going to solve it permanently, and found technology ways and training and leadership ways to solve it. And it's rare, except at the busiest times. The city markets here in town at Christmas time, I can tell you, there are lines. But there's no other way because the store is too small. But in normal times, we handle the flow in almost every store we have really well. And we didn't do that in the 90s. Yeah. We made you wait.
I thought that's how you created buzz for a product. You had big lines for the next iPhone and made people wait on and on. Horacio, I want to pull you in. So we have this idea that could you go to a client, one of your clients at Booz Allen, and say, okay, guys, the approach we're pursuing here is not to maximize shareholder value. Is that, how do you have that conversation?
I don't think you have to. I mean, I really believe that in some ways, your clients, your people, and those investors who are going to be with you for the long term all care roughly about the same thing, which is, can you produce in the short term and create sustainability in the long term? Yeah. If we go to a client and we say, well, we're trying to take as much money from you as we can right now because we would like our shareholders to be happy this week, that's a short conversation.
I don't think I'd hire you.
I don't recommend it. I've never tried it, but I don't recommend it. But if you go to a client and you say, look, we want to work on your toughest problems.
Yeah.
We want to be the ones that you pull in when there's something that needs to be done that only we can help you do. That's a conversation a client will engage with you on. By the way, if you go back to business school principles, then you're differentiated in the mind of your client. Then you actually can create differential pricing, differential profit, and all of these things that ultimately can lead you to shareholder value. But it doesn't start with, well, how much money can I take from you? Or how much harder can I make a person work? I mean, people come to work, and I joked about getting paid. I mean, I think everybody who comes to work at Booz Allen would like a paycheck at the end of the month. I think that's a fair requirement. Mm-hmm. But I think, for people to do what we ask them to do, they need to believe in something more than that. What's interesting for me is I've been at Booz Allen 22 years, and there's something that happens about 5 years in, which is we talk about it as you drink the Kool-Aid. You really start to believe in this organization and the people. You're not here anymore for whatever personal goals you had that brought you here. You're here because you love the people that you work with, you care about your clients, you think we are an ethical institution that you want to be a part of. More than half of our hires, going back as far as we have records, come from employee referrals. More than half. Think about that. You're getting the right kind of people, because if I work at Booz Allen and I think my neighbor is not that smart, probably not going to recommend them to come work at Booz Allen. And if I work at Booz Allen and I recommend that you come work at Booz Allen, it's because I'm having a good experience. So it all really can work together. And so I agree with Roger. You don't come at this notion of shareholder value versus purpose. I think it's a false choice. I think maximizing near-term profits for the next quarter and purpose, and maximizing for the next quarter and shareholder value, that is where the real choice is that you have.
I want to talk for a minute about some specifics. So we talked at a relatively high level, apart from the lines in the grocery, which was a little more specific. But I want to talk about some specific business purposes that, like, what are some examples of how businesses have defined their purposes?
One of the best statements I've ever heard an executive give at Kellogg, it was Howard Schultz who said, "We lost our way at Starbucks when we were focused on growth and opening more stores and forgot that we make our money one cup of coffee at a time." And I thought that crystallized it. And Dave, when we were talking earlier, you were saying how you delight in making customers happy. And I think the whole point is you make that cup of coffee, you make the customer happy. Yeah. And that's almost, if it's done right, it's almost a spiritual experience, right?
Yeah.
I mean, but there's the sense of each person getting a sense of purpose from giving the coffee and receiving it. Yeah. That's the ultimate heart of a transaction.
People laugh when you get personal satisfaction out of that, but it's so true.
Absolutely. How would you've talked about it a little bit, but just could you crystallize into a sentence or two the purpose of Kroger, or is that worth trying to do?
I think it's far better to give an example.
Okay.
Example, on the way here to this conference, I was in Denver, Colorado at the airport, and the representative from the Aspen Institute's wandering around looking for people to come into the program. And I stopped and just chatted with her, and she found out I worked at Kroger, and she said, "Oh, I live in Boulder. I shop at your King Superstore." I said, "That's great. I'm really pleased. Thank you." And she said, "Oh, but there's another story." She said, 30 years ago, I bought some yeast in your store that was bad. And I brought it back, and the clerk not only gave me new yeast, but gave me some flour to go along with it. 30 years later, she says, "I wouldn't go anywhere else. I love shopping in your store." Well, the interesting part is, if you could go back and find that clerk feels wonderful about having performed that service for that customer. And I know that because I've been on that side of that transaction many, many, many times. And it's allowing our associates to feel like they have been of service to the community that they serve. We have 8 million customers come through our store every single day. And that means our customers have an opportunity, our employees have an opportunity to touch every customer that comes through there and make their day just a smidgen better. It doesn't have to be a lot better. Just a smile, actually, will make you feel better and make the customer feel better. That's what I mean by purpose for our associates.
If I can build on that, we used to say in the 90s that we wanted to be the consultant of choice for our clients. We now define ourselves as being our client's essential partner. And each one of those two words matter. Essential means we're going to work on things that only we can do for our clients and that they really need, not things that are at the periphery of their mission. And partner means we don't win unless they win.
Yeah.
And that has really allowed us to reframe and rethink then underneath that purpose our entire strategy. And so we're now much deeper into innovation and into technology than we've ever been. We're actually launching a satellite. We're calling it Centennial 1 because we're launching it our 100th anniversary.
A literal satellite.
A literal satellite, a CubeSat.
Okay.
It's about the size of a toaster, just so you understand.
Just out in space.
But it's going to be in space, so it's a satellite. And we're using it to test radar interference and other things that is of great interest.
You're not using it to test corporate strategy
to the Air Force. Yeah. But and those are so the purpose becomes the scaffolding around which you build your strategy.
Yeah.
And then that allows you to operate much more nimbly in a world that is changing so fast that if people don't understand your purpose throughout your organization, you're trying to make all the decisions yourself from Command Central, and you're going to make more bad decisions than you can imagine.
Roger, do you want?
Yeah, well, I was just going to say, I mean, I think you've heard three now, the Starbucks one, the Kroger, and the Booz one, and I think they have a couple of essential qualities. All three of them had something very centrally to do with the consumer, right? The client. And the other is that they're all different. And so I think you can have, I don't think there's a formula for a purpose other than if your purpose doesn't concern your customers and doesn't inspire your employees, it's probably not very worthwhile to have in the first place. And the other thing I think about purposes is they just have to be genuine, right? This is like branding. People often go and hire if they're branding consultants, but hire a branding consultant to go get them a brand. That never works, right? Your brand is who you are, not what you imagine or wish you were.
And so I think a lot of companies some companies tackle this question by having groups that formulate corporate mission statements, which you could argue are not the most genuine of corporate communications. Is there any connection between purpose and mission statement, or do you want to follow up?
Well, yeah, sure. I mean, I think if you have a vision, if you want to have a vision or mission statement or statement of aspirations, I mean, I think it's a good thing to write down if you actually intend to follow it, and it should be reflective of your purpose. Though I think for some people it's the same thing, and on all these semantic things, I kind of couldn't care less. I mean, I couldn't care less what you title it. It's just something that would provide guidance. So like I'm with Horacio, it's something that should provide guidance. The way I think about it, and my way of thinking about strategy is you need to have that overarching purpose or aspiration, and then have a where to play, how to win choice that's consistent with it. And if you do, it's worthwhile. If you don't, it's actually counterproductive.
So think about the statement that he made at Booz about what they're going to represent to the client, and I agree with that statement. But if it was just a marketing phrase, it would be meaningless and wouldn't help the organization or help the clients.
Confuse everybody.
Yeah, but in your case, what you've done, and I think it's true, and everybody I've met from Booz would represent it this way. It's consistent, is they believe that, they operate that way. It's become their life, rather than just some phrase in a book somewhere.
But I think the reason people get cynical is sometimes you see these vision statements, we're going to be the greatest thing since sliced bread in the 2050s or something like that, which is, and you do need aspirations. We know that from research that humans need aspirations to get better, to strive for. But a lot of what a well-written purpose statement does is it gives cognitive clarity among all of the stimuli out in the world to your employees when they make decisions about why we exist and what to place first and how to make trade-offs across stakeholders. So I'd argue that actually a well-written purpose statement, Roger, goes a long way for providing that clarity to your employees when they're out serving the customers. So I'm going to counter you a little.
Well, no, I mean, I would agree with that. It's just unless your choices are utterly consistent with it, it's worse than having none.
Then you have to align your culture. I agree with all those things. Your incentive systems,
so mine was
your hiring
conditional.
Practices.
It's good if you do this. It's so bad if you don't.
You've gone from the existential to the very practical. You're skeptical of companies' ability to have mission statements that they then uphold and
make the choices and get them all the way down to their management systems and the like. I mean, having an entire organization, all the employees, all the way to the frontline employees, reflect the same strategy and purpose is a tough task. And Dave has got 375,000 of them to get coordinated. That's an awesome task.
But I think Schultz's one cup of coffee at a time is very powerful for the employees.
Right. Yeah.
And at Kellogg, I tell people we're here to educate, equip, and inspire leaders, right? And we walk through what does it mean to educate them in a university, what does it mean to equip them with the skills where they can be more effective tomorrow, and what does it mean to inspire them to attain the best in market environments, right? To go for lasting value creation. So that helps us.
So earlier it was interesting that you all more or less left out shareholders, and in the discussion of purpose, I haven't heard anybody talk about explicit societal, moral mission goals, sort of corporate social responsibility, or even scenarios where you have businesses that are set up and their mission is to create sustainable employment for coffee workers in Brazil or something like that. Do you want to, Sally, can you, we're talking about purpose, but we're actually talking about purpose in some ways disconnected from very explicit societal goals.
Well, and this is getting back to an earlier discussion we had. Indra Nooyi said something that I agreed with so much, is that often people confuse purpose and corporate social responsibility. And I think it's really important when defining the purpose for your organization, the role of the customer, the employee, the investor, and then you decide how far you're going to go on broader societal missions. And some organizations are set up explicitly around providing employment for coffee workers in the Amazon, right?
Yeah.
And they can have that purpose, but then they also have to figure out what the metrics are that they'll hold themselves accountable to. And so the piece that it makes me start thinking about is once you pick it, then you got to pick your metrics. Right? So I think you can have as broad a purpose as you choose as an organization, but then you have to also hold yourself accountable. Is that attainable? Is that something I can move the needle on? And how am I going to hold myself accountable for doing that?
Yeah. Dave, how do you think
if you broaden this to look at social responsibility,
yeah.
It becomes a little different animal, because in a company like ours, last year we spent $250 million in charitable gifts and contributions, donations, and different things like that. And that's consistent with the last several years. And Forbes called us the most charitable company in America, which we appreciated that recognition. But frankly, the contributions we make are directly related to our purpose as an organization, to what we're trying to achieve, and they are targeted at our customers, the communities we serve, and our associates. In fact, we went out and researched with our customers, what things do you think it's important for a grocery company like ours to participate in? And they told us things related to their community, their schools. Because many of the people who shop in our stores have kids and they want us to relate to the schools. They think hunger problems and issues, so we support food banks all over the U.S. We make sure that what was otherwise wasted food, perishable food, now all gets donated through those services. We look at sustainability as important to our associates, so we really go after that in a big way. We've reduced our energy usage by 30% in the last 10 years on a square foot basis across our footprint. And I used to think of that as a fixed cost. For heaven's sakes, I was so wrong. But our associates said, we can make a dent on this. And they wanted to go after it. So I think most of the goals that you think of as social and affecting the community as a whole need to relate back to what are you trying to do in your business, and does it make some sense? Now, if you're the sole owner of the business and you want to support something, fine. But your shareholders should insist that you spend the money in a way that furthers the business in a positive way. Now, it can help the communities, certainly, and the $250 million does help the communities, but it helps Kroger at the same time.
So, Roger, do you
Well, I was just going to say, so I can concur entirely with that, and I think corporations can take this role of with their purpose, with the sorts of things Dave and Kroger are doing, to sort of lean into a better world. Mm-hmm. But in due course, the customers and the employees have to reward the corporation for it, or that attempt at sustainability won't be sustainable.
Yes.
Right? So I think, and this is where I do think that the performance of corporations is in the hands of the people, not the corporations. Right? If people make personal employment choices where they want to work on the basis of the kind of purpose companies have, and if consumers make purchasing choices on the basis of the kinds of purposes those who have the products on the shelves have, then we'll have a better world. That having been said, that corporations can lead and offer up that, so that it gives the consumers or the employees something to go after.
And just on that point quickly,
yeah.
But my sense is that the research shows that consumers are increasingly responsive in terms of voting with their dollars, and employees voting with retention, and they're increasingly responsive to missions that are more explicitly social or have social and community components in them.
Yeah, and I think that's where the leading corporations have helped out the world in that way. They've gone into, I've written about this, into the frontier to try something new, something that they didn't have to do, that nobody ordered them to do, that then gets them rewarded for it, and that's what gets an upward spiral. If none of them would do it in the first place, you probably never get that upward spiral.
And can corporations go after that explicitly? If you don't believe that corporations can explicitly go after shareholder value, can they pursue these other things?
Yeah, and guess what good thing happens at the end of that rainbow?
Okay, great. Just checking.
Yeah, no, you got it.
Horacio?
I was going to say, consultants love matrices, and so I have a matrix.
Yeah.
I think of...
Do you need a whiteboard? PowerPoint somewhere?
The beauty of matrices is you can do them with your hands like this. So we have clients, we have people, and we have investors. And we have a short term and a long term. And I think what you need is a narrative, a purposeful narrative that binds it all together and that keeps it all in balance. And if you cannot do that, if any of those squares, if you will, becomes too prevalent, then you lose your way. Mm-hmm. And I think every company that I've seen lose their way has done it by focusing too much on one of those things and not enough on the others. And I think, you still see on TV these shows about, these boardrooms, and you get a sense that you can have an internal conversation in the boardroom that is different from the conversation you can have with your employees, that is different than the conversation you can have with your investors. Maybe in the 1950s, you can go to an investor and say, well, I'm going to make a lot of money because I'm going to underpay all of my people. And then you could go to a town hall with your people and say, this is the greatest place and I'm going to pay you fairly.
Yeah.
That doesn't exist anymore. We get tweeted out. We did a series of town halls. And literally the social media feeds were going out as we were talking. And so you
and there were consequences for each of the tweeters, right?
Not at all. I mean, I think
HR department had conversations.
I think you have a choice. I think you either enable it and embrace it,
yeah,
or then it goes to a place where you can't see it and then you don't understand it.
Yeah.
And so, you actually have to have this cohesive narrative across all of it that connects the short term to the long term, that connects what you're doing with your people, with what you're doing with your investors, keeps it all in balance.
I want to go back to your quadrant. So one of the squares in the quadrant, I think, if I've understood it correctly, is short term and investors.
Yes.
And so one scenario that we read about a lot in the business press are short term investors and the pressures that they exert on companies. So this is either short sellers or high frequency traders who can swing shares around, but also activist investors and who are looking explicitly to maximize. They're doing what Roger has warned us all against, which is they're looking to maximize shareholder value. It actually seems to be like turning out okay for them. I don't know about the companies, but last I checked, Carl Icahn's net worth had only increased over the last year or two. But I want to talk about that from your perspective, and this might be a short digression, but how you all see the role of activist investors, third-party activist investors in the corporate purpose and where the intersection of that goes.
I'd maybe offer two suggestions. One is that you do have to pay attention, because it can derail everything you're trying to do if an activist gets involved and if you've left opportunity on the table to such a degree that they can get involved. But secondly, I think in a well-run company, I think of them as a distraction. And maybe the most obvious illustration of that was at Procter & Gamble, where Bob McDonald, a guy I think the absolute world of, left as CEO, retired as CEO, and he left because he had become so personal, focused on him by the outside activist investor, that he said, it's distracting us from what we're trying to do. Mm-hmm. So he retired. And that was a selfless act, which is consistent with his personality, and a very hard choice, but it illustrates greatly how you can get distracted in an organization on the short term with somebody like that who gets involved.
Hey.
Not all activist investors are the same, though, right? Some
True.
hold longer-term positions than others. And the one thing I've heard consistently from a number of people, and you had even said it earlier, Dave, over breakfast, was they do lead to a more robust discussion in the boardroom and can get people revisiting the purpose and debating around it and making sure that you've got the right balance between the short and the long term with each of those constituencies that you outlined, Horacio. You know, your employees, your customers, and your investors. So I do think that there's a role that they play for keeping the dialogue robust in the boardroom and holding us accountable for keeping that wonderful matrix that you've outlined.
It's a good wake-up call. If you're outside that matrix, it does wake you up, and that part does work well.
And again, I'm not defending them all, let me be clear.
Sure.
But I think there is some good that we've seen in some cases.
Is it realistic for an executive to believe that they can manage the shareholder base so that they have a purpose and they have investors who are behind that purpose, and they don't have investors who are pushing them to maximize the dividend in the next quarter? It sounds great on paper.
I think you can, as long as you do. I think your story was a good example. If you have a purpose that you actually can achieve, becomes believable, you can go to shareholders who hold stock on the kind of basis that you're trying to run the company, say long-term investing as an example, and tell them the story if it's really believable. But if it's just a pie-in-the-sky dream, those long-term investors are going to say it's not a good investment. So you can shift who owns your stock, and in fact, I think most companies try to have people own their stock that are consistent with the kind of business that they are. In our case, it would be a long-term play, and we have shareholders who are with us for a long term.
I think it's partly about,
you need to have a value proposition for each one of those three constituencies, and you need a value proposition for investors. And if you have a really good value proposition on any one of those streams, it is going to create self-selection. Some people are going to love it. You know, some people come to Booz Allen and stay forever. Some people, 10 days into it, they can't stand it and they leave. And that's okay. I mean, that says to me we have a unique culture that won't work for everybody, but it will work extremely well for the people that we need to have. We have a profile with investors that I think works very well for a type of investor that we like and that appeals to. And then there's a lot of investors that look at that and say, I have no interest in that company. And I think that's good in a way.
Yeah. Well, I think Paul Pullman and Unilever is a good example of that. I mean, I was on a panel like this with him. He's a friend a few weeks ago, and he was saying that their share register is completely different now. As he told the shareholders, I'm not managing things for the short term. I'm giving you the absolute, I'm never giving you guidance. I'm going to give you the absolute minimum regulatorily required quarterly reports, and if you don't like that, please get out of the stock. And a whole bunch took him up on the offer, and a whole bunch of other people came in. So he says it is absolutely a different shareholder base. I guess that's 5-ish years down the line. So I think it can make a difference.
That's really interesting. So I wanted to. So one of the broader questions that we're trying to address is the link between purpose and performance. You've looked at some of the data over the long term. Are there any data that give any insight into the connection there?
So automatically, when you're put on a panel like this as the resident academic, I decided to go to what does the research have to say about the tie between a sense of purpose and performance. Yeah. And the closest thing for which there's a big body of research is on job satisfaction and its effects on productivity and performance. And the latest big meta-analytic study found that like just about everything in the world, I've got a good friend who says everything's correlated 0.3. Well, it turns out that the meta-study found that there's a 0.3 correlation between job satisfaction and performance. And you can imagine purpose has got to be part of the job satisfaction. Yeah. But it also turns out that other things you care about are, do you like your coworkers, your bosses, are you fairly paid? You know, so there's a whole lot of things that influence performance. So I think it's important not to oversell the value of purpose on a company's performance and be realistic that it does have an impact, but lots of things matter in this complex matrix that we have to manage of performance.
Roger, did you want to add to that?
No, I'd just say it's also back to what kind of purpose, right? So, I mean, I think this is one where the literature and the studies are ambiguous. And I'm unsurprised because there's a whole lot of different quality level of purpose. And again, there's no such thing as a dividing line between purpose-driven and not purpose-driven. It's just what purpose. So I think it's one of these that'll take a while probably to untangle.
So we're going to take questions in a minute. So if I can ask for the microphones. I have one last question. I want to go back to the academics, though. And the question is just about leadership training in business schools. To what extent do the practices and the traditions reflect the sort of discussion we had today? I imagine that the finance professors are still have some framework that suggests that shareholder maximization, shareholder value maximization is one of the goals of the exercise, if not the central goal.
Yeah, I mean, I guess from my perspective, I would say that the dominant dogma has certainly kind of infiltrated the business academy. I mean, we had a dominant dogma that the task of a corporation is to maximize shareholder value, and we had a dogma about human beings, which is that they're rational, profit-maximizing entities.
Well, the economists had a dogma, let's be clear. Not us psychologists.
Whatever. The economists rule business education. I mean, I would, and I think it's I think it's shifting.
Yeah.
I think it is shifting, and so behavioral economics and behavioral finance has said, well, human beings are a little more complicated than that, and I think there's been an unfreezing of the notion of teaching every young MBA student to maximize shareholder value, but I still think it's a pretty big and large theme, in part because both of those assumptions make modeling way easier, and ease of modeling is a dominant desire among academics.
I'm not as cynical as Roger, as you might imagine. I also think so.
He started off so existential.
I know. But we've been having debates for many years. I mean, to me, one of the reasons perhaps that I love being at Kellogg is we've always had a strong finance voice and sent a ton of people into finance, but we've also recognized that the core of value creation is customers. And that's one of the things that I've loved about this approach, and was actually fun for me coming back to Kellogg, because I spent 9 years at Booth. Yeah. And I spent 9 years at Stern, where the economists and the finance faculty really did have a dominant voice, but not sole voice. And one of the things that's great, and I think it's important for all of business education to think about, is how are we crafting this narrative? And Kellogg's a place where I'm proud that we've long been crafting a more balanced narrative between the power of finance and the power of customers management. We've always valued the team piece. And this isn't just a shameless plug for Kellogg. It really is that balanced model, like, going back to your matrix, Horacio.
Yeah, it's a pretty good plug for Kellogg. We're going to take questions.
Well, they pay me for something.
You're on one per panel. So where's the microphones, if we can? Okay, can you bring the microphone to someone right there, maybe? And if you could, I'd ask that you stand up,
right,
and give us your name and if they're
Scott Clemens, New York City.
Okay.
This fascinating conversation is really centered around public company structures. I wonder if any of you would care to draw a distinction on the role of purpose in a private company versus a public company, if there is one, in your opinion.
I don't think there is a difference, my personal point of view. And when I think about purpose-driven, I believe, for at least me, my leadership style, that the best way to run a business is to have the whole workforce engaged in some commonality of what you're going to believe in, how you're going to try to perform. And I think that's very true in a private or public business. A lot of people in our business think that the private businesses are doing so well because they don't have to be beholden to shareholders. My view is that a private business is beholden to shareholders. It's just the shareholder has a longer term in their mind than sometimes the short-term shareholders do in the public markets. So I don't really see a significant difference myself.
We went public only a few years ago, and we were private for most of our history, and I think all of the same things apply. The only difference that I see is that the conversation now is much more transparent and much more public. Mm-hmm. And the choices that we could make before, we could make in a small group just talking to ourselves, and now we need to be part of a much broader dialogue, and sometimes a dialogue can be painful, but for the most part, it's fruitful.
I mean, I think by 2050, when we look back on business history, we will look back at the period 1940 to 2020 as this odd period where we thought the widely held publicly traded company was a superior form of corporate organization, and we'll laugh.
I actually agree with that, but I think we're about to go into an interesting new chapter with private companies, because I felt provoked to go and start reading the Supreme Court decision on Hobby Lobby. And it is, I haven't finished getting through it, it's very dense, but it's a fascinating argument on the part of the majority opinion, which is that the Health and Human Services had rejected Hobby Lobby's claims that they should be exempted like not-for-profit religious organizations because they were for-profit. And what the Supreme Court majority decision said was you can't simply say that because you're for-profit you don't get to be mission-driven and that you can't be religiously mission-driven. And so I mean, again, I have to finish processing this, but it led me to do a lot of thinking about corporate purpose and this role of privately held. And so I think this is going to spark a whole new chapter of debate, you know, that's about things separate from, you know, being pro-choice, which, let me be clear, I am. But I want to do the research and really understand what the Supreme Court decision is saying, and it's much more about the purpose of the corporation and the rights of self-determination on that. And I think there's a lot coming on that topic.
So I think Roger just proposed the topic for next year's panel, which is the corporation as a superior organization from 1940 to 2020, is that right?
Yeah, I think that
someone should write this down so we can
80-year period.
Because I think there's a whole hour-long discussion in that thing alone. But I can't let you say something that provocative without asking you for 3 more sentences about what you.
Well, I just think the downsides of, in the modern economy, the downsides of being a public company are sufficiently great that private companies will increasingly have an advantage over them and smoke them. And so I think.
Roger, despite my answer earlier, I actually agree with that, and I think maybe that's part of the question here. But what we've tried to do at Kroger is run the business as though it was a privately owned company for the long-term shareholder. And if you do that, then you have distractions that you don't have in a private company, activists and all the other things we've talked about. But it is possible to run it much like a private company. So I end up agreeing with you that I do think that ultimately that the big public companies are going to be the disadvantaged group.
Yeah. Do you have a model for how they'll get leverage as they go private?
Yeah. Well, sure. I mean, there's all sorts of. I mean, there's so much private.
We should keep taking questions. This is our discussion for next year. Okay. So please all return.
Back to the big, bad, ugly public company here. One of the things that seems sorely out of place is how much we continue to load executives up with stock. It feels like it's great to have a panel that totally agrees that long-term is important here, and I can understand that maybe there's restrictions and stuff, but is there anything really changing in boardrooms about a belief that the executives must mostly be motivated by share price?
Not that I can see. Even though there is no evidence whatsoever that stock-based compensation is correlated with better performance. There isn't, not a shred of evidence of that. It's a dogma. The dogma is that it is, and that's because most people haven't thought through it.
I do think, though, that inherently there seems to me to be value to make sure that the leadership team in an organization has enough shareholder interest that they are mentally aligned with thinking about what should a long-term shareholder want out of an organization. And so I personally believe, in the boards I've served on and so forth, I want to see CEOs in particular who have a reasonable amount of their ownership position or whatever their assets are in that stock to make sure that they're thinking about that long-term benefit. Now, there may not be a direct correlation as Roger described. I still think it is important now. I think it's also gotten a little extreme, but or maybe a lot extreme.
But we've been at it for a long time. You know, stock-based compensation has been around for a long time, and you'd think there'd be one study, one empirical analysis that would demonstrate some kind of correlation between that and company performance. You'd think, right? 35 years, pretty much of this behavior. You'd think you could come up with one study, and there isn't.
Take a few more questions here. In the back, we have the microphone. Yep.
So 2 quick questions. One is, I'd be interested in any of your commentary on Starbucks' recent commitment around college education support and what you think that portends for the future of large companies. And the second is, and without intentionally trying to single you out, Mr. Dillon, but as I look online, it looks like your compensation in 2013 was about $13 million. Yesterday we heard from Mr. Summers about the 295% or whatever ratio between salary and CEO. So any commentary on that?
I'm actually happy to comment on both. First on Starbucks, I think that what Howard did is really smart. It relates very much back to the point I made before. If a company is going to spend money for things that are helpful for employees in the community or the community as a whole, it needs to help your business in some fashion. And I think it does help their culture, it helps them keep people, it helps gravitate in a very positive way. At Kroger, we have a tuition reimbursement program that we've had for years. And it's very much, it's not exactly the same thing, but it's, and we also have a scholarship program for children who are children of employees of our company, much for the same reason. We think there's benefit. So put that aside and then talk about salaries just for a second. You're correct in the way my compensation last year was valued. If you look at when I first started as CEO, I said to the compensation committee two things. I said, first of all, you'll never have an issue with me over compensation. Never. Because my belief is that there needs to be some moderation, and I would like you as a committee to put some brakes on, and I'd like to be a participant in helping cause that to be true. And if you were to graph out over the 10 years or 11 years that I was CEO and look at my pay and then look at my peers, I generally hit the 25th percentile, on the bottom side of the 25th percentile. And the 1 year you cited, which was last year, was one of our best years, and certainly was my highest year by a country mile. And it was mostly the highest year for me because our stock price was up so much. When I first became CEO, our stock price was about between $16 and $17, and now it's at $50, or just a shave under 50. So that's the reason it was high. We now have a new CEO. I retired as CEO on January 1st. Roddy McMullen essentially has said the same thing to the comp committee, that it's more important to him that the organization do well and that he help it do well, and that he's far more interested in being aligned with that than he is trying to be up in the high range of pay. So while I don't really defend that amount, that even seems ludicrous to me. But it wasn't that ludicrous at the time they first put it together until the stock price went up, and we had a recent run-up that caused that to be true. But generally speaking, I've really targeted about the 25th percentile, which I think was a little more responsible. Now still, you'd argue, I think, it was still pretty damn high. And I don't disagree with that view.
We've had several confessions here, it's worth noting. Your pay was ludicrous last year, and Horacio would not go to work if he were not paid. So we're getting really to the bottom of things. We have time for one or two more questions, maybe. Where's the microphones? Maybe on the aisle right there, can we get? And then we'll take a question from this side before we finish.
Hi, Diane Rosenberg from Cincinnati, Ohio, and I am not a Dave Dillon plant, I promise you. I'm just most recently a weekly Kroger shopper because of some of the initiatives you put in to increase customer satisfaction. But my question really is this, Dave. I'm very curious to know where the conversation began and how it developed for you all to hire and sustain and create participation in your teams at checkout for developmentally disabled young adults. It's quite astonishing what you've accomplished, and I'm also curious to know if you've done it out of Cincinnati, and if Cincinnati serves as your role model, because it's quite impressive.
I appreciate you asking that question. Thank you. We actually have done that nationwide for many, many, many years. And again, back to the comments I made before, I'm trying not to make this self-centered to the company, but it does help the company too. I mean, these are employees who are terrific, and I get compliments from them all the time. In fact, at last Christmas, I was ringing the bell for Salvation Army in one of our stores in Cincinnati, and we have one of the challenged kids working in that store. And he was so excited that I was coming in that he came in on his day off. He wanted to have his picture taken with me while I was doing that. So his dad came in, and I got to talking to his dad. And they are so committed to their job. They are so happy with the work that they do that they make absolutely wonderful employees. Now, obviously, they are limited in some of the things they can do, But I've found customers and our other associates are more than happy to compensate for the things they can't do and let them do the things that they can. So they get personal self-worth value for their own lives, and we get employees who are really worth their weight in gold. So thank you.
Yeah.
So we have actually run out of time. I'm really sorry about that we didn't get in more questions. But this is a great conversation. Thank you, Sally, Roger, Horacio, Dave, and the conversation will continue.
Thank you.